Good evening, good morning, wherever you are in the world. Welcome to the world's largest helicopter finance webinar. I think it might be the world's only helicopter finance webinar. It's great to see so many of you here. We've got six fantastic guests: Sebastian Delmar, Sales Director of Aero Assets; Chris Bradshaw, President and Chief Executive Officer of Bristow; Sarah Durrari, Valuations Manager at Send by Syrian; Brad Jean, Director and Founder, International Aviation Marketing; Clark McGinn, Founder and Principal, Uplifting Advice; and Crispin Maunder, Chair of Lease Corporation International. So let's get started. Sebastian, let's start with you.
Thank you.
I'm just going to... So, Sebastian, you've just published your fourth quarter.
Third quarter.
Third quarter, sorry, I'm getting ahead of myself. I don't know what year it is. Third quarter report. What trends are you seeing at the moment?
Yeah, so the activity of our asset, as you know, is we are not only a broker, we also analyze deeply the second-hand markets, the used market, focusing mainly on the twin engine. So what we have seen currently, since we all discussed back in the Q2, makes us a bit, very encouraging, but also reserved about the market. As you know, if you remember, we had a very good, strong first quarter, which was above what I would say the quarter of 2019. But then what we witnessed was a really deep decrease. Q2, it falls more than 80%. We were looking at one of the lowest market numbers in terms of deals, and also in units, and also in terms of value. Mainly driven by a steep decrease of the sales of twin medium helicopters. That's really what impacted the second market numbers, the second quarter numbers. What we've seen on the third quarter is some kind of good recovery, because we are now at around 27 units that we have been able to track, which is very close to the numbers we saw during third quarter of 2019, which is very encouraging, which means the market is coming back. Despite the COVID impact, the clear COVID impact in Q2, we saw some encouraging numbers. Same in terms of value. We hit last quarter a low point with around $59 million of transaction. So very steep decrease compared to the last year. But now we are back to 95. And to give you an idea, in Q3 2019, we were around $110 million. So clearly encouraging light between those two quarters, Q2, Q3. It's coming back. The activity is picking up. I think that's a point of view that is shared by a number of players in the brokerage activities. A lot of activities across all the board, all the regions, and that's very encouraging. Where we would be a bit more, I would say, cautious is, of course, with the COVID situation. You still got some, I would say, some challenges to overcome each time you are dealing with a new deal, you're trying to close a deal. Most of them being, of course, the difficulty to travel, to go to see the aircraft. Some basic points, I would say, but which makes the deals much longer to close on both sides. So very encouraging, very encouraging. What we have seen also is an absorption rate. You know that we track very precisely the absorption rate per aircraft. That's what you can see in the report, and I encourage everyone to download it, because it goes into every type of twin engine. And what we have seen overall is a stable. So the the absorption rate, which is the liquidity of the market of the different types of aircraft, is pretty stable, which is in a way good, but doesn't neither makes us very looking forward to see what will happen on the Q1 next year.
Were there any particular winners in the last quarter? What are the hottest assets?
I think that's in terms of liquidity. You mean in terms of liquidity? Always mostly the 109 Eco is one of the one. The 135, 145 stays very strong, and we see some also encouraging numbers coming from the heavies coming back. The 225 especially coming back. Which is pretty encouraging, because for a while they were the low numbers. So encouraging on the light and on the heavies, as I said. What we look forward to on the Q4, as I said, we are extremely busy. I think when we talk with our colleagues and also with the other companies, we are very, very busy. We are, at least on the inventory of 15 aircraft, we are 9 which are at various stages of transaction right now. So extremely busy across the different region. And I think that what we will be looking at the end of Q4 would be, anyway, despite of this activity, we can expect a decrease of the total number, of course, of the number of transactions. In a positive, I would say, if we are optimistic, we'd say at least a decrease of 10% of the volume of transactions in units. At least that's what we are looking at, despite this late recovery.
And your thoughts on, will all those deals get closed in the fourth quarter?
The numbers, you mean?
Well, we're running out of time, aren't we, for the fourth quarter, and it's hard to cross.
Yeah.
And new lockdowns in Europe.
Exactly. That's that's what makes us a bit in a way optimistic, because we have a lot of activities. But as I mentioned before, the different lockdown or challenges that we have to overcome. If you want to close those deals before the end of Q4, are still in front of us. So as I say, cautiously optimistic for the end of the year. We think the market might reach around 40 transactions. That's in units. That's what we are trying absolutely on our side to deal with, to close all those deals before the end of the year. But some of them, of course, may find themselves, due to the current situation, pushed towards Q1 2021.
And what's your prediction for 21?
I would say it's difficult. At this stage, it's difficult to say. I would say I would love to be able to have a crystal ball on that one. I think with the different waves hitting the countries, you see it in Western Europe. It's very difficult to predict exactly what will happen. I think we might go for a strong Q1 because of this transfer of deals from Q4 2020 to Q1 2021. But beyond that, it's very difficult to see.
And it's an impossible question. Sticking with hard questions, Sean McKenna, Vice President Aircraft Risk and Asset Management at RBI Group, is asking, do you see any new challenges in the oil and gas sector with a change in the US presidency? And you're in Dallas, so you must have a view on that.
Yeah, I'm in Dallas, which means I'm still far away from the Gulf of Mexico. It's still a long distance. It's difficult question to say. I would prefer to leave this to I think Chris or something like that, because what we see is a recovery of some deals across the pond on the used market for the 225. As I said, that doesn't mean that this will translate into directly in the oil and gas market. That the aircraft that sometimes are coming back on the used market may find, especially the AVs, may find themselves being repurposed for other missions. So my read, I would say, on the evolution of the oil and gas market would be limited through this lens of the used market. So
okay.
Difficult to say.
A question from Crispin, who's coming up later. Mm-hmm. Crispin Maunder, Executive Chairman, LCI. We are seeing an increased activity in private jets due to COVID-19 security. Are you seeing a similar activity in VIP helicopters?
Yes, exactly. Yeah, we see exactly the same trend, and that's one of the strong markets currently. The VIP is pretty strong, and what we see is people replacing their aircraft, selling their aircraft, going for newer aircraft or larger cabins sometimes, or more modern, and also some people who had, for instance, a fixed wing and deciding to enter the rotary wing business. So pretty interesting for us, because it's not only the replacement, it's our newcomers to this market on the VIP, and I think it follows the same trend that Crispin may have, and he will talk later about it, but that we may see something where people want to be autonomous, they want to travel by themselves, be able to be flexible, not use big airports, and also being able to travel into small communities to reduce their exposure to the pandemic. So I think that's the same trend that we see currently.
Great. And final question, a quick one from Terry Spruce, freelance aviation journalist, writes a lot for us. Where is the strongest market geographically? Where are the buyers coming from?
Buyers are still very strong in two main markets that we see currently are the large markets, North America, and very strong also Western Europe. Those are the two main areas that we see keeping strong and generating this I would say, this rebound from Q2 to Q3.
Brilliant. Thank you so much, Sebastian. That was brilliant.
Thank you, everyone.
Thank you. And we're now delighted to have Chris Bradshaw, President and CEO. He gets 2 salaries for that. At Bristow Group. Chris, how are you?
I'm doing well, Al. Thank you for having me, and kudos to you for keeping the community together. I've listened in on all the previous town halls, and it's been great, and nice selection with the new software. This is quite clever.
Well, we're honoured to have the world's largest operator on, or one of the world's largest operators, so thank you so much for your time. What are you seeing at the moment? What's the macro trend?
Well, certainly in our offshore oil and gas end market, things are pretty challenging, facing a lot of headwinds there. We are experiencing that differently in different parts of the world. We're seeing more of the negative impact thus far in places like Nigeria, the U.S. Gulf of Mexico in terms of activity slowdowns, offshore Canada, for example, and then other markets where we have a presence, such as areas of the North Sea, mainly Norway, and our Caribbean business have held up better. But the underlying fundamentals in offshore oil and gas are quite challenging, and we expect them to remain challenging for the next year or so. Our search and rescue business continues to go very well. We are seeing additional tenders come up for SAR contracts around the globe, and so that's a brighter story. But the offshore oil and gas sector is pretty difficult.
And how hard has it been operationally dealing with COVID?
It's been a challenge. Earlier in the year, we had to adjust to a lot of new very quickly, a lot of new procedures around passenger screenings, passenger flow through the heliport, the on-aircraft procedures. And of course, unlike a commercial airline where we as the operator set the standard and all the passengers either abide by that or they don't fly, we're dealing with a small group of very large customers, and a lot of them have different ways that they want to do things. So not only were we adapting to the new requirements of COVID, but we were doing that in different ways for different customers. Of course, we have a standard that everyone needs to abide by, but certain customers want to do things differently. I think our team did an exceptional job adapting very quickly and settling into a cadence. And actually, I'd say the whole industry. I want to applaud our industry for how quickly we adapted, and some credit to Helly Offshore, who was, I think, very important and influential in bringing the community together to share those best practices and help us all adjust to this environment that we're dealing with.
So going back to regions, you mentioned that you went through. Are there any areas which are particular bright spots where you're seeing customers looking for more lift?
The Caribbean region has been a bright spot. So we have a presence in Trinidad and then also in Guyana and Suriname, and that market's held up well. In Guyana, you have the prolific discoveries that ExxonMobil has made, of course, and then just across the border in Suriname, a number of players have been active there. Given the attractiveness of those reserves and the potential there, even in the depressed commodity environment that we're experiencing now, we expect activity to continue to be very, very constructive in that area of the world. And then Norway, I mentioned, is another one that's held up pretty well. It's been fairly stable despite the commodity price challenges.
Okay, we've got a really hard question from Steve Robertson, Director, Air and Sea Analytics. Contracts are being awarded in some regions at very low rates that effectively preclude investment in aircraft and safety. Who is going to hold these oil companies to account and enable a level playing field for international rotorcraft operations?
Well, thank you for the question, Steve, and thanks for the great work that you do, the data that you produce. We have a difficult customer base. That's certainly the case, but for me, I honestly think it's not right to blame the customers. We as an operator community need to have discipline, and we offer a highly valued service that is safe, reliable. We're transporting the most valuable assets that our customers have, their people, and we need to do that to the highest standards. And I think discipline amongst the operator base should be considered when we're all grousing about the rates that are clearing the market.
Okay. Question from Ken Swartz, Senior Editor, VFS, Vertiflight. Chris, can you provide some detail into how your consolidated Gulf of Mexico operations, how you consolidated them? As a frequent visitor, what differences would I notice visiting the bases?
Well, we're going to have fewer bases going forward. We don't need as many as the two separate companies had individually. So we've closed both some flight operation bases, a repair station. These are areas of the business that really were not meeting our return standards from a profitability standpoint. So we're consolidating down into fewer operations, and we're going to get better utilization, drive better throughput through a smaller number of facilities. That's part of the savings that we'll have. And then we are looking for other ways to be more efficient beyond headcount reductions and base consolidations, just employing technology to do things just more efficiently.
Okay, we've got another question from Ken. Can you provide some detail on what you're planning to do with the Leonardo AW609?
We're excited to be the launch operator of the 609, exciting new class of aircraft for the civilian market with the first of its kind tilt rotor. I think the near-term applications for that aircraft are likely to be in long-range air medevac, where speed and range are particularly important, and particularly in areas where you can't rely upon fixed wing infrastructure for runways. So think about areas like the Caribbean and South Florida, connecting those nodes for medevac. We also think that another market will be the VIP market, where, again, better point-to-point efficiency, not being reliant upon a fixed wing runway and that infrastructure, will be valued by that segment of the customer base. So those are the two areas where we see likely the nearest term application for the 609.
And are you looking to grow into the VIP market?
We've done some. We had some operations both at Legacy Bristow and Legacy Era with Blade here in the U.S., which some of the audience may be familiar with, and we did that both in the New York tri-state area as well as in California. So we've had a presence in VIP before. I think the 609 would be a good market there. Beyond that, we don't have major initiatives underway for the VIP, but it's something that we'll look at.
Okay, and talking about aircraft types, presumably you're getting called all the time by OEMs. What are your thoughts on models at the moment?
Well, for our offshore oil and gas business, I think we're the largest global operator of the S-92, AW189, and 139 model helicopters, and we expect those to be the workhorse for the offshore oil and gas industry going forward. There are, of course, some new models that are coming to market, which we're keeping an eye on, like the 160, like the 525 out of Bell. No commitments or anything specific there now. As of today, I think the world is probably well supplied by 92s, 189s, and 139s as it relates to offshore oil and gas. Again, we are bringing in the 609, different market segments we think that will be applicable for. And then we are looking at other adjacent markets where we could apply our expertise. Offshore wind is one of those. And of course, when you're talking about offshore wind, some of the newer model light twins, like the 169, the 145, are very important for that market segment.
Okay, a question from Guillaume, Managing Director of 360. Do you still feel there is overcapacity in the oil and gas market?
Yes. Too many operators, too many helicopters. There's too much capacity.
Do you see it changing soon?
I don't know about soon. I think it will need to change one way or the other, because there's still, in many parts of the world, just not a sustainable industry structure, and so it will have to change. Some of that will be amongst the operator community. Some of it will be the assets. We interested in following Sebastian's comments on the earlier segment. We've been an active seller of aircraft as we're looking to rationalize the combined fleet. In the last quarter, ended September 30th, we sold 31 aircraft, and a lot of those are models that we see going into other end markets as they're no longer needed or desired by the customer community in offshore oil and gas. And so those were 10 H225s, a dozen Bell 407 singles, and the balance being S76 C++ models. And C++s are a great example. There are way too many offshore configured C++s globally today. Those need to find their way into different end markets and be repurposed.
You've got a question from Kelly. Will there be further consolidation in large operators? You don't have to talk about yourself here.
I think there will be, and it really comes back to what we were just talking about with the capacity issue. There just needs to be some fundamental changes to make this sustainable, investable sector again. And so I do think there will be consolidation of operators. It's always difficult, if not impossible, to predict when and how that comes together. These processes often take a long time, but there needs to be.
Brilliant. Thanks, Chris. Ken Swartz again. How is Bristow approaching the fleet mix in terms of owned versus leased aircraft?
So today we're right at 80% owned, 20% leased. We're not targeting a specific percentage. I do think the majority of our fleet will continue to be owned, but we are always going to have a portion of the fleet that's leased. Really valued relationships with the lessor community, and we're going to look to grow and continue to invest in those relationships that we have with lessors. And there are times when leasing the aircraft is going to make sense given the underlying customer contract, given the terms of the lease, et cetera. There are a lot of times where it won't. And we have a lot of contracts in the offshore oil and gas industry where the customer has the right to cancel for convenience at any time. And so having that kind of exposure on your end customer contract, if you're operating the contract with a leased aircraft where that's a fixed commitment, cannot be altered, for us, that's a difficult risk mismatch. But there is, again, a good portion of our business where leased aircraft will be the best solution.
Brilliant. And I'm going to put the question Sharon McKenna asked before. Do you see any new challenges in the oil and gas sector with a change in the US presidency?
We don't think there's going to be a lot. I think if you look at the offshore policy that the two candidates had, there wasn't that much different. The Trump administration was also blocking off new areas offshore the U.S. for exploration. So outside of Alaska, potentially, where we don't have a presence anyway, we didn't see a big difference between the candidates. I think more of the differences are going to impact onshore activity in the oil and gas industry if there is a ban on activity on federal lands, if the Environmental Protection Agency starts to enforce higher stringency that effectively place limitations on state-owned lands, that could limit onshore activity. Arguably, that may push investment dollars to the offshore. So that's kind of an interesting, that might be a net benefit. But overall, I would say we don't see much impact with the change in administration.
Chris, thanks so much. We really appreciate it. Thanks so much for joining us.
Okay. Thank you, Al.
Thanks. And that's Chris Bradshaw, President and Chief Executive Officer of Bristow. And now we're going to go to Sarah Darawal, Valuations Manager at Ascend by Cirium. Sarah, how are you?
I'm very well, thank you, Alistair. How are you?
Very well, thank you. You've got slides.
I've got slides, yes.
You're also focusing on the theme of mergers.
I'm looking at, usually I take you back a little bit just to bring you forward a bit more. So I thought I'll put this out there to put a little bit of context to the conversations that are being had at the moment and what we see end of year, and a little snapshot of our forecast as well. So I hope you find it interesting. I will run it through as quickly as I can so we can have some questions afterwards. So let me see if I can share my screen on your fancy new software here, Alistair.
I'm glad it's you doing it.
Yeah, I know. You've outsourced that bit, haven't you? Now?
Yeah, it's much easier. Yeah, well done.
Well, you can't see anything though, can you?
Yeah, I got it. It's up.
Oh, you can see the slides, can you? Because I can't.
Yeah.
Okay, that's going to be weird. Okay. There's a guy. So, as I said, we'll be looking a little bit, not too much. I'll be skimming on the surface here. So if there's any themes that anyone's interested in exploring further, you can always ask questions or just contact me afterwards. So we'll be looking a little bit on M&A and restructuring, and basically what consequences we have seen coming out of that and relating to values, and particularly the oversupply that we currently see in the offshore sector. We'll have a little look in how portfolios have diversified both for lessors and operators for the last 10 years or so. I want to touch a little bit on retirements and useful economic lives, because it's another trend that is quite interesting at the moment and could possibly have some interesting consequences. And then I'll give you a really quick snapshot of the Ascend by Cirium 10-year forecast, and I'm hoping this will take about 10 minutes or so. So generally, looking at M&A activity and restructuring, it's obviously is a good thing for the market. It did have to happen. To give you a little bit of a reminder of what we've been through in the last few years, we started with CHC going into Chapter 11 in Q2 2016. We then had PHI and Bristol both entering and exiting Q1. They didn't exit in Q1 2019, but they certainly went to Chapter 11 at that point, both coming out in the same year, I believe. Then we had the Macquarie acquisition of Waypoint in Q1 19 as well. And last but not least, we've now seen the Bristol and Era merger. And to answer the question that was brought up earlier, I don't think that we've seen the last of these consolidations. I think we're going to see more moving forward, because I believe the industry does need it. But every time we look at consolidation, there must be consideration to a fleet rationalization. I've been actually quite worried about saying that word, but it came out all right. The fleet rationalization, I'll say it again, which has increased availability, which then subsequently put pressure on values. So this is, again, it's very brief. It's the operator fleet for PHI. I've put Bristol and Era together just so you can see the effect there. NHV and CHC, I, for some reason, don't have Babcock on there, but Babcock has actually remained largely the same. But on the whole, and between the major operators, the fleet has shrunk by about 15% since 2018. If we then look at the lessor fleet, again, just a really brief snapshot here, the lessor fleet has increased by around 8% since 2018. And unsurprisingly, I guess, it's the offshore sector that we have seen take the main reduction in the in-service fleet numbers. They have declined by about 10% since 2018. If we then have a quick look at portfolios, we have seen an increased leased share of in-service helicopters. So that increased reliance on leased assets is something that we would expect to see in the current environment. We have a notable lack of available financing available for acquisitions. We've got sometimes very short contract terms, which makes it quite difficult to justify an ROI on an acquisition. And a general reduction in demand in particularly the offshore area, where we tend to find the most investable assets. Now, the dynamic with the increased lease fleet is something that we've seen time again in the fixed wing sector, so it's not unsurprising. Lessors are diversifying to mitigate risks, and we have seen this happening amongst the operators as well. In particular, the increase in share for both lessors and operators would be in the EMS sector, I'd say. So just really briefly, in 2010, Bristol had 100% of their fleet in offshore operations. It's now 80%. PHI had a 50-50, has a 50-50 fleet in offshore operations compared to 40-60 in 2010. CHC has remained largely the same, and Babcock has always had more of a share in parapublic sector than they do in offshore. So just a little bit of a snapshot there. If we then move into retirements and useful economic lives, I thought I'll just state our definition. The ISTAT definition that we follow for useful economic lives is the period of time over which is physically and economically feasible to operate the aircraft in its intended role. So the interesting thing with this is not operational lives. We know that aircraft can operate until 40, 50 years old, but the useful economic life particularly looks at the economic viability of continuing to operate that aircraft. And with retirements, with the surplus that we've seen, while some machines have been shifted around and deployed elsewhere and in different roles, we can now see the evidence of the sort of real surplus, as I call it. Those are the ones that are struggling to be transitioned. When that happens and there's a large surplus with an increased supply and reduced demand, we do start seeing retirement trends of very young assets, which we have seen now, especially around the 76ers that was already mentioned, some at the very young age of 10 years old. And when that happens, we do have to start looking at the underlying assumption of useful economic life. And I think, but I don't know because we haven't done the full analysis yet, but I think we can expect that it will be reduced somewhat. Retirements will reduce the pool of availability, which in the long term is a positive thing. However, in the short term, it does put a lot of pressure on values, which for the most part have continued to decline this year. And unfortunately, although I do like being the bearer of good news, I don't see that changing much moving forward. So with regards to the impact of useful economic lives, I think we need to study it. And I think it's going to be possibly split up depending on size category, which we currently see in the fixed wing. The wide bodies and narrow bodies have different assumptions. And also very much looking at the role which the helicopter is operated in. Right, I realise that's gone very quickly. It's actually only been about 5 minutes, but there you go. So let's have a quick look at the Ascend by Syrian fleet forecast. Now, this little weird thing on the right is meant to be your sort of hourglass into the future. I don't know if that's coming across with a bit of a helicopter twist on it, but there you go. So the Ascend by Syrian fleet forecast was revised in Q3 2020. Normally we revise it at the end of Q1 each year, but we delayed it a little bit because of the events that was going on this year. And it actually shows that the underlying trend is relatively consistent. It predicts a continued stability in parapublic sectors, whilst offshore is predicted to see a very slow recovery, with the 500 deliveries that have been predicted into this space over the next 10 years will predominantly be for replacements. Other highlights include the new civil turbine deliveries in the next 10 years of just over 7,000 aircraft worth around $40 billion in 2020 dollars. 42% of those are expected to be in the next 5 years and 58% in the second part of that 10-year stretch that we're talking about. 59% overall is expected to be for replacement, while 41% is for growth. Annual deliveries are not expected to surpass 700 again until 2024. Replacement demand is predicted for approximately 18% of the fleet. That's 4,200 helicopters. And lastly, regionally, North America is expected to retain its position as the largest fleet with 34% share. APAC is expected to see the highest fleet growth at the predicted 30% share, and that's just about overtaking North America, which I believe from memory is about predicted at about 27 or 28% of the overall share. Ultimately, we see the in-service fleet growing by 1.2% annually until the end of 2029. So a couple of conclusions that we can make from this presentation. Restructuring and M&A to rationalize operations and ultimately also fleet, and I think that must be remembered that it is a fleet issue as well. Offshore have seen main reduction in in-service fleet numbers, not unsurprisingly. We have an increasing reliance on leased aircraft. Surplus remain and continue to put pressure on values. Diversification of operator and lessor portfolios are expected to continue. Young retirement ages are observed, and we question the impact on the useful economic lives generally. And we predict a very slow recovery over the next 10 years or so. And that concludes my presentation. If you have
cheery
questions. Yeah, I know. I'm usually a lot more cheery than that, but I think there's been certain events and challenges that has really put difficulties on the industry as a whole.
Okay, quick question from Richard Berkemeyer. How are you addressing financial impairment? I think he's talking about the current changes to GAAP and IFRS.
How we're addressing that?
Yeah.
Well, that from our methodology, things like that are naturally addressed within the market. So we would generally see a shift in favour for those aircraft that doesn't meet the requirements and the standards, and that can then be a push for replacement.
Brilliant, Sarah. Thank you so much. That was great.
Thank you, Alistair.
Thank you. Right, we're now delighted to switch to Brad, Director and Founder, International Aviation Marketing. Brad, are you there?
Hello. Yeah. Good morning, Alistair. How are you?
Good. How are you?
I'm great, thank you.
So we've already had lots of insight. What are you seeing at the moment?
Well, I think it's along the same lines of I think what everyone said. It's I think pre-COVID everything was trending very, very well in the business. I think everyone would agree. Lease rates were going up. There was aftermarket activity in terms of trading of assets. All those types of things were going on. I think it was a very positive trend. Obviously, as we've rolled into COVID, it's been much more difficult. Everything's more difficult, whether it's getting legal or tax advice, whether it's moving aircraft, inspecting aircraft. Everything is harder today, and it's just something we have to adapt to, and I think we have adapted to in throughout the world.
Do you want to talk about offshore? What are you seeing in that market? Obviously, Chris is saying it's tough.
Yeah, obviously it remains tough. I mean, I think the one thing that we've seen that is positive is that there is lots of tendering going on globally. I think we've seen a lot of it in Africa, as Chris said, in the Caribbean. Brazil obviously had their big tenders go on, and in Thailand and Malaysia's ongoing. So that's all positive stuff. The big challenge is still that we have this overcapacity in the business, and that overcapacity has to be absorbed. So how does that happen? So those are the questions that we're going to need answered as things go forward. But I think there's positive indications that just before we came on, Steve Robertson sent out one of his reports, and it's all positive. You know, flight hours are going up. There's more opportunities out there. So I think going forward, it's going to be very positive.
Question from Mark Kelly: are you seeing any distressed sale activity?
Yeah, definitely we're seeing some distressed sale. Not that, I really expected to see a lot more. I think that banks have been very, very patient with their capital or with their investments. We haven't seen a mass aircraft come on the market. There has been in specific sectors. I think we've seen more helicopters on the market than we ever have for specific models. But overall, we've not seen this mass exodus of aircraft or mass inflation of aircraft on the market. I think we will. I think that as banks become less patient with their lending, that's going to happen. The big challenge that we have is we have a balance issue in that, if we have a lot of aircraft come on the market, that's great, but is there money to invest in buying those aircraft? And I just don't think exists today. The capital is not there, but it would be nice to get there.
Okay, question from Jeremy Cox, Jet Values. Jeremy, the corporate jet market is seeing new buyers. Is it the same in the helicopter market?
Yeah, I wish I could say yes, but surprisingly, no. No, we really haven't seen, and I'm looking more in the United States rather than Europe. I really expected to see a lot more buyers. There's the 100% tax depreciation in the U.S. right now, and I don't see the doors getting knocked off to buy aircraft to take advantage of that. I still think that, it in the VIP market is truly a luxury device, and public companies don't necessarily want to be seen as adding helicopters when they're, laying off employees or the other challenges that exist. So we're just not seeing a lot of it. I did expect to see a lot more.
A question from Kuljit Yadav, sales manager, Airbus Helicopters. How do you see the opportunities in developing markets like India for offshore and government VIP transport missions?
I definitely think there's there's definitely a lot of growth in. I don't necessarily, offshore. I think the push as oil prices continue, hopefully grow. I think the push will continue to be in the offshore oil and gas market. India is a great example, where they've just had some awards, a new contract. There's other tenders coming up. So that's all really good stuff. Where I really see opportunities, and I think we've seen it throughout COVID, is parapublic, where they now see real requirements for search and rescue type aircraft or for EMS type aircraft. And I think we would have seen some of those transactions and things take place. What's held us back is really COVID and how do you bring together, a government body to make a decision or any of that. I think as we, as positive, trends emerge, I think we're going to definitely move towards some more parapublic stuff.
And what's your forecast for 2021? I know it's impossible to forecast anything at the moment.
I think it's going to be, it can't get worse. So let's start with that. It can't get worse. So, I mean, I'm relatively positive. I think that coming out of this, it's going to be, we're going to see some positive things. I think that owners of aircraft of all sizes, we primarily deal in medium and large helicopters. I think people are getting more realistic with pricing, and that's going to be, that'll lead to sales. I think, we're getting a lot of downward pressure on aircraft sales due to leasing. I mean, I think the lessors, they've had returns of aircraft, and that's really put pressure. It puts pressure on the used market because things just don't move. If lease rates are going down, people tend to lease. If lease rates go up, there's more of a ability to buy. So it's we got to get back to that balanced model where I think we were going at the beginning of 2020, and hopefully we'll get there. End of Q1 2021.
Brilliant. I think most of us just want to get out of 2020.
Get back on airplanes. Go see people.
Thanks so much, Brad.
No worries. Thank you.
And now, if I can find him, I seem to. Okay, Clark, I think is having Crispin Maunder, Executive Chairman, LCI, needs no introduction, so he won't get one. Crispin? Can't hear you now, Crispin. Crispin? Okay, can anyone else hear Crispin? Is it me you can't hear?
How about that?
Great, I have you.
Hey, fine. I'm fine. I'm just saying we need to find Clark. The industry needs him quickly.
I know, we had Clark earlier, and we've lost him. Crispin?
Yeah, I can hear you.
Okay, I'm sure everyone knows they're LCI, but do you want to explain briefly what attracted you to helicopters and how are you enjoying being a helicopter lessor?
Oh, that's an interesting one. Well, I mean, LCI, we actually just celebrated our 16th birthday, so I suppose you could say we're the unruly teenager now. But actually, very much like Milestone and now Macquarie Rotorcraft, I mean, we stretch over both fixed wing and rotary, albeit that we actually exited our last fixed wing investment at the beginning of this year, part of a transaction that we did last year. So we are now currently essentially purely helicopters. We've had an interesting ride, certainly in the helicopter market. It didn't turn out to be exactly what we anticipated back in 2011 when we started looking at this. But the same thing goes for certainly Waypoint and Milestone as well. But we've come out the other end, and certainly I think, we as an industry have matured a hell of a lot, and have compressed probably 10 or 15 years of fixed wing experience into a matter of 3 or 4. So, I think we're much wiser, we're much more sanguine about our views of the rotorcraft industry. But I think that puts us in good stead. I think we've learned a lot of lessons and we've learned them well.
Okay. We had, at the start, we had Sebastian gave us a great guide and Brad's mentioned. What are the main helicopter types you're focusing on now? And what are your thoughts on the technology cycle?
Good point. First of all, we set off with the idea that we were purely going to look at the medium-sized helicopters, twin turbine, medium size. So we actually shaped our market as the 145 up to the 175, 189. And then we moved towards placing orders directly with the manufacturers and working with the manufacturers to get our foothold, shall we say, into the market. So, over the last 7-8 years, we have now expanded our focus. So we're taking on slightly smaller twin turbines as well, still staying in that market. And we have gone upwards to the 92. But our focus has been primarily in risk mitigation and being very careful in the way we've shaped our portfolio. So, for example, offshore oil and gas exposure is running at less than 30% of our overall portfolio. About 50% of it is EMS, and the balance is wind, search and rescue, pilot transfers, another interesting market, and the like, and training helicopters. So that's where we are at the moment. Looking into, and this is one of the things that I particularly like about this sector compared to fixed wing. The technology cycle is far longer than we see in fixed wing, primarily due to really the nature of this business. The classic limit for a helicopter size is 19 passengers. To go any higher, you need to have a cabin attendant on board. There is some interest in going faster, but there is a natural technical limitation, which I know that Airbus in particular are trying to push out. But essentially, it's more range and safety. I mean, safety without doubt, as far as avionics are concerned, as far as performance is concerned, single engine performance, rig and fly, and all these things. Don't forget, we must remember that our industry operates between effectively 8,000 feet in sea level, and it's pretty murky down there. So, we are very much safety focused. And indeed, I was very interested in one of the questions about, are operators, beginning to cut corners too much? Are they being pushed by the oil companies? And I fully agree with Chris that, it's the industry who's got to push back and just say, fine, I'm not going there. Now, I'm not saying that any operator is willfully operating unsafely or anything like that, but I do think that, time has come for the people that, shall we say, pay all our salaries as such on this call, need to actually reflect as to what sort of service standard and safety standard they are insisting on. And we should therefore then manage our house accordingly.
Okay. I think you're the first person I know to catch COVID. So how do you see values and lease rates in the next year, and how have they been impacted by COVID?
Sorry, I was laughing so much. What was the question?
How have
you want some?
How have lease rates and values been impacted by COVID? I know you have.
Actually, surprisingly, in our market, not that much. In fact, to be perfectly honest, we're in an ops cycle. I was listening to some of the comments made, in particular Brad's. I disagree with him. Now, admittedly, I'm looking at it as a lessor, and I'm looking at it very much as a medium capacity helicopter lessor. But we're seeing, beginning to be an appreciable upward cycle at the moment. Probably started at the back end of last year. Now, obviously, COVID had an impact. COVID's had several impacts that are not directly affecting the market, but for example, obviously, the oil price was badly affected. So that has affected the offshore oil and gas market. But it wasn't direct COVID, it was indirect COVID as far as the oil price coming down. Then we had the COVID impact directly on the operators insofar as they couldn't get the people going out to the rigs or to the wind turbines or whatever into the bases to fly them out. So that had a direct impact. And certainly some of our operators have therefore suffered as a consequence. But it was relatively short term. And certainly at the moment, I'm seeing, as I said, an up cycle, particularly on some of the more popular types like the 169 and the 139. Less so at the moment in the super mediums, 175 and the 189. But certainly, the mediums, 145, 169, 139, they are definitely positively trending upwards now, which is good to see. There is, without doubt, a replacement cycle that was going on and then to a certain extent stopped. It's now come back again. And I can certainly see current technology aircraft, and it doesn't necessarily need to be new aircraft. It could be old current technology, anything between 5 and 10 years old. coming in to replace the older types such as the 76, the 412s, Dauphins and the like. In fact, I'm sort of rather wickedly thinking about this. It's rather like a snake shedding its skin. That, the new skin is coming in and the old skin is being thrown away. But it doesn't mean to say that the skin is useless. I mean, snake skins, actually, fun enough, you can make handbags out of them and shoes out of them. So, there is a repurposing of the skin as such. I hasten to add that I'm not suggesting that Brad and Sebastian are snake oil salesmen or anything like that, but Brad. But that's, this is, and this goes back to Sarah's point, and Chris's point. There are too many 76s in offshore configuration, but some of them are going to go to the knacker's yard, but some others are going to be repurposed. I mean, they're a good helicopter. It's a good utility helicopter, so there will be secondary markets for them.
I think you have to kill a snake to actually use the skin, but
No. It sheds its skin all the time, doesn't it?
I know, but it's a thin, papery substance. It's useless.
Oh, I see. So in which case, it's a wrong analogy then.
Mark Kelly is asking, will we see new entrants into the helicopter leasing space?
Welcome back, Mark. Welcome back. When are you coming to join us? Look, I think it's an interesting market. I still think the value proposition is there. Residual values, whatever Sarah comes up with later on. I mean, the obviously consensus view is 30 years, and maybe that's challengeable today. But it's considerably longer than fixed wing aircraft, where I suggest even economic lives of 20 years is being challenged now, and certainly on wide bodies. I think the technology cycle is a far more reliable cycle than this constant upgrading, and indeed this what I call transatlantic battle between Airbus and Boeing, each trying to outdo the other. I think we have a more mature OEM sector. It's far more collaborative in a lot of respects. Yes, we see sort of head-to-head competition on things like the 175 and the 189, but generally they're not completely on top of each other like you have with the A320, 737, or 350 and 787. I think the general outlook for this business is therefore, shall we say, more stable. And I think it's certainly an extremely interesting market with regard to investors coming in. Also, of course, we're a very different market to the airline market, where the airline market is reliant on the passenger. That's us, and we're very fickle. So you might have a 10-year relationship with an airline when you finance an aircraft, but you don't know what the management's going to be doing in 5 years' time. Whereas a lot of, for example, EMS contracts that the lessors tend to get very much involved with are 10-year relationships with either a government or sometimes an oil company. Some of the contracts are 10 years longer, search and rescue and the like. So it's much more analogous, I would say, to the old airline IT business back in the 70s and 80s, where you could identify your customer's customer. And that customer's customer quite often is a good investment grade customer. So that provides the stability. And of course, once the helicopter is embedded into an operation, it's like a cog within a machine. Everyone's interest is to make sure that cog just does what it does. It's well oiled, and it therefore performs its role in the industrial cycle, be it DMS or offshore oil and gas or whatever.
Okay, more questions for you. Jeremy Cox, has the insurance market surprised you? Have the insurance market rates surprised you recently?
Well, that's more of an operator issue than ours, but yes, obviously it's a burden that the operators are having to take on, and yes, there has been a substantial increase.
Okay, Scott Ashton, President O2 Aero Acquisitions. Is there a market for these legacy aircraft with all the teardowns occurring? What will all these teardowns do to the MRO supply chain for components?
Well, I must confess that we are, with a few exceptions, and in fact only one exception, which is 176C, which we have actually in the process of parting out. We have some older aircraft which are in our managed portfolio, but the majority of our aircraft we acquired new, so we frankly aren't in that market at the moment. So I'm really not the right person to talk to. That's really one for maybe Brad or Sebastian.
Okay, question from Bobby Osan. Is this time for small operators to take advantage?
Of what?
I think of overcapacity. Is this the time for them to get good leasing deals, older aircraft?
No. Well, I mean, come on board, but as I said, to a certain extent, if you wanted to take advantage of the cheaper rates, you should have been around about 2 or 3 years ago. But they have been trending upwards, as I said, for the last couple of years for the more popular type. But certainly we've seen what I call a proper upcycle from the end of last year.
Okay, final question from Andre Cohen, CEO, Coherent Financial. In evaluating a lease prospect, do you place more reliance on the underlying contract or the creditworthiness of the operator?
Well, certainly we look at the underlying contract and the credit of the end user without doubt. And then we look at the operational capability of our customer being the operator. But obviously there are some operators that you don't need to look through. I mean, there's some Bristow is a classic case, and Babcock. But generally we would do the full due diligence from our customer, their credit standing, their ability to operate, and who are they operating for, and is the end user going to be around to provide the wherewithal for that contract to continue.
Okay, actually, final comment. Congratulations to Jasper. I see you have a new CEO. What's happened there?
Yes. Well, I mean, Jasper, first, we're just sort of reshaping the business. As I said, we've just exited the fixed wing market, which turns out to be rather fortuitous. But obviously now we are re-looking at the fixed wing market. There could be opportunities next year. But LCI has always been a cautious lessor. So we're now devoting, shall we say, some senior resources to looking at this market. Mike is now vice chairman with the focus on fixed wing, but very much involved with me and Jazz and Praveen Vetravel in the strategy of the business overall. But Jazz is now in the hot seat, as I call it, and Praveen, who's moved up from being head of structured finance, he's now our CFO. I mean, we've all been together for a very long time. It's a fun company, and we'll work together really without status as such. We don't use titles, but sometimes they're useful as far as a business card is concerned.
You can't say it's a fun company. You have to ask people underneath to say that.
I see. Well, you ought to ask somebody else then. I think it's fun anyway.
Well, as long as you're here. Crispin, thanks so much. Clark got frozen out, so we'll have Clark on the next one. Thanks so much to Sebastian, Chris, Sarah, Brad, and of course Crispin Maunder. If you'd like to stay on networking, please do, and you can go to the networking room. Thanks so much. Stay safe and see you soon. Thank you very much.
Thanks, Al.